Hello friends, welcome back to the channel. Today I'm very excited to share a very simple and mechanical scalping strategy which is highly profitable. You only need to give 30 minutes daily. You are correct if you listen me. Only 30 minutes daily after opening of the session and your trading is done. If you follow this particular strategy, I think you will be not requiring any further strategies or jumping onto some other systems and holy grail searching and all that. If you religiously follow this particular strategy, only 30 minutes daily is required to be profitable. Very simple rules and very straightforward procedure is there. I'll be sharing it with you guys. So, in this particular strategy, this is based on gap up opening in the morning session. As we see, many of the stocks which are related to some news or they are having some result session or there has been some positive or negative development in this particular counter or any stock, then those stocks will be following a very high gap up or gap down. So we'll be filtering out and we'll be going through every step that how do we need to select the stock. So this video will be detailing the process of selecting the stocks so that there is no ambiguity, like which stock should I trade, what should I trade. Every step will be detailed in this one. So those stocks which are having some particular filter and they are providing some gap up or gap down will be required to trade this session. The time frame will be 3 minutes and you'll be opening your trading terminal at maybe at around 9:10, and after 10 you will be not requiring this system anymore. You need to invest half an hour, mostly up to 10 a.m. That's it. Your trading strategy will be done. If the trading rules or trading setup is being provided after 10 a.m., you don't need to take it. That's it. Only half an hour up to 10 a.m. So let's get into this straightforward into the rules. I have just straightforward detailed the steps in this particular whiteboard. This is a free whiteboard. So what we'll be requiring, first of all, we need to follow NSE pre-open. We need to open NSE pre-open and just go to the NSE site where all the pre-opening session stocks are mentioned. By default, the category which is mentioned in the drop-down is Nifty 50. You need to just change it to FNS stocks. Why FNS stocks? Because these are the stocks which are having the highest number of volume plus good liquidity. So buying and selling won't be requiring any, uh, the spread will be very high. When you sell it, you are uh, getting the stock sold at 2 rupees down. When you buy, you are getting some 1 or 2 rupees up, not at your intended price. So that is very minimal chance of happening because volume and liquidity is very high in FNS stock. Plus, this particular strategy can be applied on cash stocks. Plus, if you want, or if your capital is permitting, you can also deploy this strategy on the stock futures. So this is the benefit of selecting the stocks from FNO section. So after opening this section, you just need to filter it down on the keep the sorting, click the sorting on the change percentage change. So we will be filtering two stocks daily. One will be on the positive side and one will be on the negative side. So for positive side selection, you need to choose the stock which is above 150 rupees. Below 150 rupees, I think, as per my experience, that is not required. The stocks which are above 150, you need to just select those stocks. Plus, the second filter will be the percentage change for positive or negative side should be 1.75. Getting my point? 1.75% up or down. So this uh, pre-opening website gets freezed around 9/7 daily. So all the pre-order sessions and buy and sell orders which are being traded in the pre-opening session, these orders are freezed around 9/7. So once you arrive at your trading terminal or open this website at 9:10, then you will be able to see all the stocks which are making a gap up or gap down. So possibly Amaraja Battery in the previous session was having some news or some result, or there was some positive development. That's why it is already showing a gap up of 5.63%, which is huge. So probability of this stock going higher is high. So if you get the feeling of trading, or if you try to define trading, trading is just, you know, capitalizing our, process on the highest probability side. Correct. So we are just dealing with the probabilities, and we just need to align in a way that we are toward the section where the probability is little higher, and after that we just need to manage our risk. So this is our trading. Entire trading can be summarized into these two steps. So as this is opening a gap up, so our thinking and possibility for premise is that this particular stock is having some positive news, and after gap up opening, either this stock will be moving continuously up. Continuously up means there are too many buyers, so they will be giving a up thrust to the upside in the opening minutes. No, we cannot comment on the entire movement of the day. It can be up or down, nothing. But the possibility of this stock giving a up thrust in the opening minutes is high. In the same way, when you sort it down with negative sentiment or click on this negative change percentage, you are seeing that Hindustan Petroleum, IEX, M&M Fin, these are having negative opening. Negative opening means these stocks are opening gap down. Since these two stocks are qualifying our criteria, means minus 1.75 or above. So you need to choose the first stock which is above minus 1.75, and one stock from the positive side which is 1.75 plus. All right. So these are the two stocks, and we'll be looking. So our stock selection is complete. This is the most important thing which you will need in this particular strategy. How to select a stocks. You see, the rest is the execution part. So we'll be looking at the next step. So this is one. We have selected the stocks. Now we'll be opening the 3-minute chart. So if we look at the example of Amaraja battery, here with it, open the 3-minute chart. 3-minute chart, and what you will be doing, you will be just waiting for the first 3-minute candle to finish. So this is the 9:15 candle, 3 minute. It will be completed around 3:18, right? Once 3:18 is about to complete, you need to be very quick. This strategy can be coded. If you are well versed in AFLs or Python libraries, you can code this. This is a purely a rule-based system. So if you are executing this manually, you need to be quick. You need to be quick on the keyboard side. That is the requirement of this particular strategy. You place the SL order. SL order just 0.05%, 0.05 rupees above this high of 3-minute candle. So high of the candle is 567. You need to place a high SL order at 567.05. Just one tick above. And on the lower side, the low is 543. So you need to place 542.95. This will be your sell order on the sell order on the lower side, and buy order on the upside. So as you can see, our buy order was triggered here. Buy order got triggered here. After that, it moved around 0.84%. All right. Your target from this breakout will always be 1%. You don't need to be greedy. You will be getting the trading opportunity almost every day. There can be certain days where there is no stock which will be qualifying the criteria of 1.75%, which we are applying as a filter, but still most of the trading days you will be getting the trading stock most of the day. So you do not need to be greedy. In case it is going to 1%, you will be thinking that we need to still be in the trade, and it will be going to heaven and sky. No, that's not the case. That's not the case of scalping strategy. This is what it is based on. You just need to focus on your 1% and get out. That's it. You need to focus on 1% and get out. That's it. Now, as you see, this has not moved to 1%. Quite simple. It mostly moved max 0.84. So once your stock keeps on moving to 0.5%, you move your stop loss. What will be your stop loss? Okay. Once your buy is triggered, you keep the stop loss on low of the breakout candle. Low of the breakout candle. Please note that. Low of the breakout candle will be your stop loss. Once this has broken to the upside, you will be moving your stop loss here. Once your stock moves 0.5%, you will be keeping your stop loss to break even. Mind it. Once your stop loss has been kept to break even, post the stock's movement to 0.5%. You are not giving your money earned back to the market. Quick scalping is this only. Once it moves to 1%, you are just taking your target of 1% and getting out. All right? And just getting out. So this is the entire strategy. This is the entire strategy. We are still not having the idea or having some confusion. Please repeat the video. I have just outlined each and everything. It is very, very simple. Stock selection is very simple. Target placement is very simple. Entry point is very simple. And stop loss trailing is also very simple. Once the stock moves 0.5% in your direction, you'll be moving the stop loss to break even. Once it moves to 1%, you are out. That's it. It will happen in 2-3 candles, 4-5 candles. That's not in your control. But if you are getting this breakout post 10 a.m., avoid that trading. Avoid the trading, sit and relax. That's it. It's not your trade day. All right. Let's look at some other example. Let's see. Rain. Rain has also been opening 2.61%, which is obviously above 1.75%. All right. So this stock, instead of going up, has moved down. You see the point? So in this, gap filling is being done. So after this candle has completed, you will obviously be placing your buy orders here. And once you see stock moves to 0.5%, move the stop loss to break even, and in the next candle, your break even stop loss will be getting triggered. So in both the conditions, you will be getting a break even trade. That's okay. In every day, you won't be getting a target, and every day you won't be getting SL as well. Simple as that. Some days will be very, very small profit, that is called break even. So it is very obvious. Let's look at example of negative side. It is Hindustan Petroleum. Hindustan Petroleum. There is one exception case which I'll be just explaining in this only. All right. The exception case is like after you find your stock, which is very simple, you will be placing the stop loss here, right? But you get a scenario like this. You get a buy order and it does not move to your break even point. That means the stock neither moves to 0.5%, neither your target, and reverses back and hits your stop loss. In that case, your stop loss will be stop and reverse stop loss. Getting my point? It will be SAR. That means you will be placing the stop loss below the candle, which will be double the quantity. For example, you have placed the order for a buy of 100 stocks. Now you will be initially placing the stop loss in such a way that stop loss quantity will be 200. Getting my point? So this is the very important point you need to just note into this one. If your stock is just reversing before going to 0.5% in either direction, you will be placing your initial stop loss as SAR. SAR means stop and reverse. It will be stopping you out. Your 100 stocks position will be getting closed, and another 100 stocks is position will be getting opened in the sell direction. After this happening, you will be having a sell position here, and you will be getting your target of 1% downside. You will be getting the target of 1% on the downside. But in case this stock would have moved 0.5% very clearly, then you would have got out just break even. That is fine. That is as per the rules, no problem. Now, this is the exception case. It can happen sometimes that without moving to 0.5% either direction, it will be just reversing. In that case, you will be placing your stop loss as a double quantity with double quantity of stocks. That way, you will be getting your position closed and opened in the opposite direction. Very easy concept. It's if you are trading the market, you'll be already knowing it. No problem with that. In case you are having any problem, just rewatch the video. Still, you are not having the clue what is going on. Just post in the comment section. I'll be replying it back. No problem with that. So this is the basic rule. What you have got. If you see my whiteboard, I have just mentioned each and everything. How to select the stock, what time frame you need to select, what will be your target, how to place the buy and sell order. Once the first 3-minute candle is finished, 1% will be your target. If the stock moves 0.5% in your direction, you move the stop loss to break even. That's it. These are the simple rules. That's it. I hope you like this strategy. Please share it with maximum people so that this strategy could be known to multiple people. Please smash the like button if you like the content. Share it with your friends, and support the channel. If you have not subscribed, please subscribe and smash the notification icon. If you are having any queries, please do post in the comment section. I'll be glad to reply back. Till then, thank you very much.